What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to your final What's Making Headlines of a year. Ben Squires and Annie Kane here, wrapping up the news of the week and probably a little bit of a year as well. Ben, how are you going?
Yeah, good, thanks. I can't believe we're at the end of the year. It's seems crazy, but yeah, it's just flown by really quickly.
It is absolutely flown by, and what a busy year it's been, both for us, obviously reporting and writing about the mortgage industry, but also, of course, for everyone listening. All the brokers and lenders and aggregators had a massive year in 2025, and yeah, if we just think back, beginning of the year, people were like, we're going to have some rate cuts this year. It's going to be fantastic. I think we knew at the beginning of the year it was going to be a big year. But wow, come now to December, we've had record mortgages written. We've had 3 rate cuts. We've had changing policy left, right and centre. We've had new record market share for brokers. It's been a massive year.
Yeah, federal election as well.
Federal election. I completely forgot about that. Yeah. Actually, that's true, because this week we had the mid-year financial economic update, or MyEFO, and I was looking back at the budget announcements, and they kept on calling it PFO, and I was like, I had to look it up. I was like, what is PFO? And it's the pre-election financial, sort of office like stats. So completely forgot we had a federal election.
Yeah,
what a year!
I was writing our end of year wrap up the other day, and I was like, I can't remember.
Maybe
that says a lot about my short-term memory, maybe. But it's been a really big year, I think. For the
massive
industry.
year. Well, we'll get into, I think, some of the news from this week as well, because even though it's been the last full working week for a lot of people before the holidays, people have been really pumping out the actions. There's been a lot of movements. There's been a lot of changes. So we've been kept busy right up until this week, and I think probably going into next week as well, we'll still have some stories coming out as well that will be pretty big. But probably the big one that has us, we actually referenced this last week, where we were saying, is it too early to talk about rate hikes? And since then, everyone's talking about rate hikes.
Yeah. So 2 of the majors have sort of shifted their projections that came out this week. CBA and NAB now expect the RBA to lift the cash rate by 25 basis points in February. Which, might seem it's a bit of a shift, I think, because I think everyone's been expecting it to happen at some point, but February is quite soon.
Okay, February is the next time the RBA meet. So it's let's say 10 weeks from now.
Yeah.
But yeah, actually less than that. But yeah, that's not great for me with my mortgage. Not loving that. But if you think again, back to the beginning of the year, people were saying this easing cycle, they expected it to finish around 3.1%.
Yeah.
We're still nowhere near that. We're still at 3.6, and we've been held there for a while. I think since August was the last time the rates were cut. So there's been a lot of change going on. I think inflation's still an issue. Employment's still pretty good. There's been a range of kind of different factors where I think the RBA were actually, we don't really need to cut anymore. The economy looks all right, but actually maybe we need to start hiking because people are still spending quite a bit of money.
Yeah.
And obviously again, wanting to cool things down a bit. If you look at what's happening in the property market as well, housing costs going up, electricity costs going up, but then the other parts like retail, Black Friday sales, Christmas, lots of spending going on. So yeah, really weird economic data flow.
Yeah, and I think NAB was saying they see rate increases in both February and May, which would take the cash rate to 4.1%.
No thanks.
Might be a hard sell. But
I know. Yeah. Well, it's interesting because, before it was both CBA and NAB changed their forecast this week, and before that, the majors were completely split on what they were seeing happening. So we had Westpac saying we think there'll be 2 more rate cuts next year. So they were kind of out on a limb there. ANZ had readjusted their forecast to say prolonged hold. NAB and CBA had both previously been saying prolonged hold, and now they're both saying hike in February. So we did check back in with ANZ and Westpac to be like, are you guys revising your forecast to, now that these guys have moved? And ANZ said yes, but only to change it to prolonged hold. And Westpac Westpac also changing to prolonged hold. So I think now we're kind of split on 2 people saying rate hikes, but again, depending on what the data does, and depending on how far that will be, we'll have to wait and see. And then 2 major banks saying hold, but potential for cuts or hikes.
So we're due to get, is the next big data set is the quarterly inflation data?
Quarterly inflation, I think that's on the end of December. I think it's the 28th. I'm not sure on the top of my head. But that will come through, and we've recently haven't had, I think it was employment data came through. So yes, there's still lots to be keeping an eye on over the holidays.
Yeah.
Gosh, all those economic updates. Can't wait. But we will obviously be talking about all that when we come back. And I think this will continue the conversation for the next few weeks. Once we get back, will be what's happening with rates. And I think that's something that everyone's really super keen to understand. And again, we've been seeing all the lenders kind of changing their fixed rate pricing based on the fact their forecasts are changing and what they think is going to happen next year is changing. But it's a weird one because I think there's still so much heat in the market. Like all the brokers I've spoken to this week, you know, I kind of have been like, I'm so sorry if you're on holidays. And they're like, no, I'm working for another 2 weeks. I've got so much to get through. Like there are so many people still settling. There are people still buying. There are still people still looking. So
what sort of borrowers are they?
Everyone, really. I think still lots of first home buyers. So all of the, you know, the guarantee scheme, the 5% deposit scheme buyers, they're still trying to get through because you only have a 90-day approval period for that. So if you don't get a loan, a house within that 90-day period, you could lose your space in the deposit scheme. So that's hurried people along. The Help to Buy scheme recently launched, so people are starting to use that, but that's a much smaller pool of buyers. And then actually this week, when we had the MyEFO, the mid-year, I can never remember exactly what that stands for.
Mid-year economic and fiscal outlook.
Fiscal outlook, thank you. I was like, what's the O for? The mid-year economic fiscal outlook, thank you, Ben. When they announced that yesterday, Jim Chalmers said, actually, we're going to give you $10 billion over the next few years to build loads more houses for first home buyers. So that they can actually purchase them. So actually dealing with the supply issue, which is good to see because we've seen so much of this demand coming through. So 100,000 new homes just for first home buyers. Yeah. We haven't got the detail yet of what that will look like. So in the actual data pack that was released, they were saying it will be grants and concessions. So I think it's like $2 billion of grants and then $8 billion of concession loans. And basically being like, we'll work with the states and territories to help build these properties that will just be for first home buyers. But yeah, that'll be pretty interesting. It's over the next 8 years, I think.
Yeah, and that's the accessibility piece has just been a huge part of the problem, I think, for first home buyers. So yeah, it's encouraging to sort of see them do something to tweak, to move the dial a little bit. Again,
though, I think one of the questions that always is asked whenever there's anything, you know, about construction or housing is being like, where are we getting these builders from?
Yes.
Because we don't have any. We're really in a dearth of builders at the moment, construction workers. So, well, it'd be great to see that, 100,000 new homes reserved specifically for first home buyers in the different states. And I think they said they expect the state governments to also match some funding, so $2 billion, and they're going to work with them to identify lands either underutilised or vacant to build these properties. But they're hoping to start building them from next financial year, so it's pretty soon.
Yeah.
But that was one of the big things that happened this week, and I think that, again, will continue to feed into all of the demand for people wanting to get into market, for wanting to buy a home. And over the next few weeks, we will be releasing news stories on The Advisor, looking at some of the forecasts for what people think will be happening in 2026, both from a lender perspective, a broker perspective, an aggregator perspective. So you can keep an eye out for all of those sort of forecasts for the year ahead. But we'll take a quick break here. And when we come back, we'll wrap up some of the masses of regulatory action that's been taking place this week. And we'll get into it just after this message. So this morning, we had APRA and AUSTRAC coming out with an announcement about action they've been taking against one of the lenders. Now, this is something we wrote about last week. Oh, actually, maybe it was this week, at the beginning of this week. Time is flying. I don't know. I have no idea what day we're on. But it was around four arrests being made for allegations, charges of money laundering. And 4 different people were arrested down in Victoria, I think they were, in relation to some suspicious activity that was taking place, allegedly suspicious activity that was taking place in a Bendigo bank branch. So we wrote that story earlier this week. I think it was on Monday. And then today, this morning, both APRA and Austrac came out saying we've been looking at Bendigo Bank. Bendigo Bank had actually self-reported to Austrac saying we've got concerns here about potential money laundering going on. So they self-reported to Austrac, and Austrac had basically come out today being like, yes, we're going to take enforcement action. So really interesting to see this. And basically, we don't yet know. It's still allegations at this stage. They're actually taking an enforcement investigation into what Austrac is saying serious potential contraventions of the Anti-Money Laundering and Counter-Terrorism Financing Act. So big deal here. And this will really basically focus on whether the bank is actually complying with the laws. And then if it's found not to be, obviously, more regulatory action will be taken.
Yeah.
But that's not the only thing. APRA also adding on a capital charge to the bank.
Yeah, $50 million operational risk capital add-on from January 2026.
January 26. So basically saying we're worried about your risk protocols and being like, whether it's non-financial risk or anti-money laundering and counter-terrorism financing controls, we're worried about these being deficient.
Yeah.
So I think the capital add-on, they basically said it will be in place until there are remedial measures put in place. And any wider concerns have been addressed. So, yeah.
Who'd want to run a bank?
It sounds awful. But yeah, so they're also saying they're requiring Bendigo to undertake a root cause analysis to understand the extent of non-financial risk management issues that going beyond money laundering and terrorism financing as well. And we know already from the arrests and the stories we've been writing on the Advisor following this is that Bendigo has obviously done quite a bit of work here. They've had to, because they're listed, they've had to, issue statements to the market when they've been doing this. So I think when they first started talking about it, it was maybe October in their different kind of financial updates. Then we had another one in November, an update. Then we had another one recently. And basically they said that they hired Deloitte to do an investigation into what their controls look like. That investigation found inconsistencies and deficiencies. So now they've got Deloitte doing a remedial program for them, being like, what she would be doing. And obviously, Bendigo said, we will do what they tell us to do. Yeah. But some statements coming out from the bank this morning. So the Bendigo Bank chair, Vicky Carter, said, the bank recognises robust risk management practices are critically important to ensure the bank can continue to protect its customers and deliver on its purpose of feeding into the prosperity of customers and communities. And Richard Fennell, the CEO of Bendigo Bank, said, we've taken a number of steps to improve our risk capability and strengthen risk culture over the last 12 months. However, I recognise the need to intensify our focus and our efforts. So we'll have to wait and see what these investigations lead to. But it sounds like for now, lots of eyes on controls. Watch this space. And, it's something that I think the banks have been really taking a look at recently. I mean, AML CTF stuff, we've been banging on about it for ages. And I feel like every time we talk about AML CTF, people are like, oh, boring. But it's so important because it can be, obviously really damaging for a lender to have any kind of risks in this case. And then, as we mentioned, this investigation going on to alleged money laundering in one of the branches where 4 individuals have been interviewed relating to dealing with suspected proceeds of crime. Police investigation still ongoing.
Yeah, far out.
Yeah. I mean, it's really good work to see, obviously the banks taking control and being like, we want to remedy this. But what a nightmare. Really.
Yes.
What a nightmare for them. Not the only regulatory action, though, this week. I feel like the regulators have just been pumping out the announcements, being like, quick, the holidays are coming, get these stories out. So we also did see a former broker banned for 10 years, which was a pretty big one.
Yeah, so this story came out yesterday, I believe. Yesterday, or was it the day before?
Day before.
Day before. But former Sydney-based broker Tihoa True has been banned from engaging in credit activities for 10 years, with her Australian credit licence cancelled effective 8th of December 2025. According to the ASIC release, ASIC found True submitted annual compliance certificates that omitted her termination by lenders and an aggregator and failed to show adequate compliance arrangements, which sort of breached credit legislations. There were other regulatory failings. ASIC sort of alleged that she did not maintain required books and records, failed to pay industry levies on time, and was sort of expelled from AFCA in 2022 for the non-payment of membership fees. So, yeah, a few things going on there.
Yeah, I actually did some digging after it because obviously every time a mortgage broker's banned, we're like, well, what for? What's the reasoning for it? We did some digging to be like, what's happened here? And I did actually find that not only, I think AFCA actually expelled her in 2020 for not paying the levy.
Sorry,
yeah. And then the MFAA also, there was a tribunal and they expelled her in March 2024.
Yeah.
After finding that she failed to act with appropriate skill, care or diligence when submitting incorrect income supporting information. So I think this is basically when we're saying a broker's been banned, really it's a former broker because I don't think they were active in the space. I couldn't find an active business page for her. So I think, this is a kind of final step. And this often is the case when we see bannings coming through from ASIC. They're normally quite delayed from the initial kind of problem being announced or being found because, of course, it takes a while to actually get an investigation together and go to court. So, there was... basically saying she can appeal if she wants to, but yes, not great not having told anyone that being terminated by lenders and aggregators.
No, it's not ideal.
We've had another regulatory announcement as well this week. So there have been moves around competition law. So this is from the ACCC. And in a nutshell, they were working with Equifax because they were saying, we've had a look at some of the contracts and they think that some of the clauses were potentially or had potential to be anti-competitive by basically saying, you've entered into some contracts and we think the language around here could be problematic because it might actually block some competitors from sharing data, meaning you've got monopoly. So they've entered into an enforceable undertaking with them now. And this is quite interesting because, of course, we know that Equifax and provides credit reporting data for so many people. It's a giant in this space. Brokers use them all the time for home loans, for doing credit checks. Banks use them. It's really about verifying income.
Yeah.
But the ACCC said that they'd actually done an investigation which focused on a particular agreement they had in place with a company called Super Choice Services, which is a superannuation clearinghouse. And they said there was a significant, looking at the clauses that they had put in place, and there was really around exclusivity and preventing Super Choice from supplying data to other income verification providers. And there was also a revenue sharing arrangement in place that basically helped to ensure this exclusivity, and ACCC did not like that.
No, understandably.
They were like, we think this might be basically stifling competition.
Yeah.
They haven't said that they've breached any laws, so there hasn't been any actual findings, but they're saying basically they were worried about it. So Equifax has agreed to go into an enforceable undertaking to actually not do that again.
Yeah, and the undertaking will remain in effect for a little while, right? Until...
Yeah, so I think they were saying basically that they will commit to not enter into any new agreements that prevent competitors from accessing electronic payroll and superannuation data. And I think that's pretty much ongoing, but the specific enforceable undertaking, I think it goes until 2028.
Okay, yeah.
December 2028, so 3 years.
Yeah.
And we also talked to Super Choice about it, and they were like, again, there's no finding that there was any kind of breaches of the law here, but welcoming anything where it's providing more competition, basically.
Yeah.
So yes, lots of regulatory action this week, keeping our fingers whizzing across the keyboards.
Yeah, there's no shortage of stuff, and it does seem like end of year rush.
End of year rush. We're gonna fall at the finish line next week.
Yeah.
But before we do, just a couple more things to wrap up, including some of the big announcements from the Elite Broker ranking, which just came out, and we'll get into that after this break. So the December-January edition, the summer edition, as we call it, of the Advisor magazine came out, and the front cover this month, which was also in our news on Monday, was the Elite Broker ranking for asset finance, which is the final of our big kind of segmentation Elite Broker ranking announcements. And this, again, another great one. So we've done previously the residential ranking, we've done the commercial ranking, which was commercial property and cash flow loans. And this one now, asset finance, partnered by Optimise Aggregation, really looking at who's writing the largest volume, what kind of number of loans are they writing, and really just taking a look at who's who in the zoo. Yeah. Of course, it's self-submitted, so it's not necessarily us saying these are the top brokers, but based on the submissions we received for the ranking this year, we put together a list. And I thought really interesting seeing the changing kind of idea of what asset finance is, because some brokers really were pumping them out.
Yeah, and the top asset finance, the broker who took out the top ranking for overall asset finance was William Hong from Talk to a Broker, who settled, I think, $68.3 million across just over 1,500 loans in the financial year 2025, which is massive. He sort of specialized in both consumer and business asset finance, so kind of doing both sides of it there. Sort of high value, high volume lending. But
he was actually pipped to the post by Michelle Gorevsky, who is the founder and director of LendLab, which is a brokerage / fintech. She wrote 1,704 asset finance over the last financial year. I was like, that is huge. A smaller dollar amount, 49.6 million. So this really goes to show that these brokers must be utilizing technology to get through that volume.
It's only 365 days in a year.
Exactly. Like, how are you doing that much that quickly? But really interesting to see that. And I think also the question is what kind of loans they're writing. Because if it's consumer finance loans or is it equipment finance? And this also is why asset finance is a really interesting ranking for us, because some brokers are really specializing on the big commercial stuff. So they might only do, 20 loans in the year, but they're big volume, they're big dollar value. Whereas other brokers might be doing a high volume of just normal car loans. So it's really interesting seeing those different ones. Other high volume brokers, we should say, though, include Will Hamer from Hamer Asset Finance. We've actually done an Elite Broker podcast with him before.
Yep.
And he wrote 685 loans. And Tierman Morgill from Pure Capital Finance, he wrote 509. But collectively, in the ranking, everyone wrote more than 4.5 mil, which it's not massive, but nothing to be sneezed at.
No, not at all. Yeah.
So congratulations if you made it into the ranking. You can check out the full ranking. I think it's the top 30 in the December-January edition of The Advisor, which is out now and on the Advisor website, theadvisor.com.au.
Yeah. There's quite a few interesting pieces in there, actually, just to give it a bit of a plug. We've got the succession. I think I mentioned the succession planning story that we did with Trail Homes.
Yeah.
We also did our summer property report, which is a regular sort of feature we do.
You can check that out next week as well in the bulletin. We're putting it in there just to refresh your memory of what's happening.
Yeah, a bit of a teaser in there. But I think succession planning is super interesting to me. Particularly for those sort of brokers who have sort of built their businesses up from scratch.
Yep.
And when you decide to retire or think about expanding your business, maybe selling it to someone else, what does that look like? And, we're talking about property so much this year. It was really good to sort of have a chance to really dig into that for the summer property report.
And also in this edition is all the highlights of the Women in Finance Awards as well. So if you want to check out who won what, find out some more interviews and Q&As with some of the people who were there, including some leaders in the space. We've got a Q&A with Michelle McPhee, who is the Assistant Governor of Business Services at the RBA. We've got a Q&A with Tanya Sale from Outsource Financial. We've got one with Nat Smith from ANZ. So really great to see these profiles of women in finance. And also I think looking at what's happening kind of over the next year, we've kind of been doing a lot of review of the year 2025 and looking forward into 2026. But I did note that the last few podcasts I've done on Elite Broker have talked about succession planning. So Katrina Rowlands, who's an AFG broker, she brought her daughter into her brokerage. And the Elite Broker podcast we did, I think it was last week, she talks about how she's been doing that, how like kind of works. So I thought it was really interesting. And then another one that comes out in a few weeks, actually, spoiler alert, looks at how someone bought a trail book and what that looked like and how they kind of integrated. So it's kind of both sides of the coin there, being like someone who's thinking about stepping back from their brokerage and then someone who's like, I'm basically buying that book. So really interesting.
Yeah, the big takeaway I took from all of it was that you can't start planning this soon enough, I think.
Yeah.
Yes.
I guess it's the same as well, like with normal retirement. Like if I think about trying to plan for my retirement now, it feels like a very long way away because I am so young. But I think looking at that, like, I have to kind of start working on it now because otherwise I'm not going to have enough to retire on.
Yeah, exactly. Yeah.
You need 30 years just to save. Yeah. But yes, if anyone who's not yet done any succession planning, maybe the holidays is the ample time to do it.
Yeah. Good idea.
So we'll be taking a break from the podcast for a week or so. So we'll be back in the office on the 5th of January and we'll be back to business as usual at that point. But yes, next week we'll be pretty quiet for podcasts. So you can spend that time, if you miss us, going through the back catalogue.
Oh yeah, there's heaps of podcasts on the site, so it's a good chance to catch up.
Yeah, so lots of things to catch up with, whether it's podcasts with brokers, finding out how Australia's leading brokers are running their businesses, finding out who's the new brokers that are doing amazing things and what they're doing, or talking to some of our lender partners. There's a great one actually as well from Ruan Berger, who's a broker coach, talking about how you can become your best broking self in 2026, what kind of things a broker coach does. Maybe if you look at how you can kind of think about your business. And then we go into the busy season and Better Business Summit and Awards coming up in March. So really looking forward to all those. Ben, have you got any nice plans for Christmas?
Just seeing family, just sort of faffing about, really. I'm going down to Melbourne for a little bit, but just keen to relax and refresh for a little bit and get ready for another busy year. How about you?
Yeah, sticking around here. So pretty much just working my way around the restaurants of Sydney. It's actually quite a nice time of year to go to some of the restaurants that normally are packed during the year, because Sydney pretty much empties out over the holidays. So yeah, just going to some really nice fancy restaurants, eating my body weight in food, drinking my body weight in wine, and then probably come January we'll have to hit the gym hard.
Yeah, not to worry.
For anyone else listening, we hope you all have a fabulous holiday and a happy New Year 2026. If you've got anything that you think is exciting coming up, or if you've seen anything that you think we should know about here on The Advisor, do feel free to reach out. You can reach me on editor@theadvisor.com.au. And of course, have a fabulous 2026.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.